Hi, I'm FAIZ ADLY, and I'll be starting our presentation with Part A, Malaysian Financial Reporting Standard 8. Under MFRS 8 is an operating segment, which is a financial reporting standard that requires a company to disclose any information related to the operating segments based on how the business being managed internally. It adopts the management approach, meaning the segment information should be disclosed as the same way as it is viewed by the management on how to decide on the operational issues. The purpose of MFRS 8 is to provide the users of the financial statement with a clearer idea about the type of business activities of the company and also the financial consequence of each component exists in the business activity of the company. With this standard, companies have to present such information, for example, like assets, profit or loss, revenue, or maybe expenses of each segment. Thus, this will enable the users to get a better understanding on how various type of segments or component will contribute towards the whole performance of the organizations. Next, I'm going to talk about shift of decision making, the most upper level of operational management responsible for reviewing operating segment performance and making key strategic decisions about allocating resources to its operating segments. So the title of CODM is not really required to be defined, as it may vary, depends on how the organization internally reports its operation. So it may be from Chief Executive Officer, CEO, maybe by Managing Director, Board of Directors, or maybe Executive Committee. Easy to say, different company has its own different CODM. First example I can give you is Petronas Dagangan Berhad. The CODM of the company is by Managing Director, supported by Board of Directors as well, in performing reviews of segment performance and also in charge in strategic decision making. The second example is Capital A Berhad, formerly known as AirAsia Group Berhad. Present the CODM by the whole group of CEO, where the latter has the task of analyzing the segment results and undertaking the strategic decisions about the operational activities of the entity. So these two examples indicate different applications for Malaysian listed company and how CODM plays a crucial role, which is important in segmental reporting of the company.
Now I'll be expanding on the two types of segmental report. This report is required under MFRS 8 to help users to understand more on how different parts of an organization contribute to overall performance. The first one is the business segment report, by which it reflects on how the company is internally managed and shows the performance of each operating division. Now the second one is geographical segment report, basically present result based on the region or the country where the company operates. Now these two types of report improve transparency by showing both internal operation and external market performance. Now this is the business segment report by YTL Corporation Berhad. Here we can see that the utilities segment is the most significant, generating over 21 billion ringgit in external revenue, making it as the largest group operation, which also delivered the highest profit before tax, indicating its superior profitability. Now, this shows that the company core financial strength lie in its utilities division. Now, moving on to the geographical segment report. In 2023, it shows that the company has earned most of its revenue at Singapore at nearly 16.9 billion ringgit. However, their largest holding of non-current assets are in the United Kingdom, worth nearly 23.4 billion ringgit. This shows that the strongest sales market are in the Singapore, but the majority of their long-term infrastructure and investments are based in the UK. Now, moving on to the segmental reporting benefits. There are two benefits, namely enhanced performance evaluation. It identifies the core drivers. The users can see which business or product line bring in the most sales and profits and which isn't. It can also prevent masking. The users can more accurately forecast future earning and growth potential. The second benefit is the improved assessment of risk and return. It measures capital concentration. It tells the user the size of the risk, if the economy or the government in that region suddenly change. It also measures asset efficiency. It tells the user if the money put into each part of the business is a smart investment or not by checking if the profit earned is enough to justify the asset use. As you guys can see here, the utilities division is the core driver as it provides the most external revenue, while the management services and others division provide the least external revenue. And here we can detect the weakness whereby the hotel operation suffered loss over 48 million ringgit.
Now let's move on to interim financial reports MFRS 134. MFRS 134 is a standard that guides companies on how to prepare interim financial reports, which are financial statements for a period shorter than a full financial year. Its main objective is to ensure that interim reports provide timely and reliable information about a company's financial performance and position. This helps investors, creditors, and other users make better decisions. The standard requires consistency, meaning the same accounting policies used in annual reports must also be used in interim reports. Now for the significant event that might be affecting the financial performance of the company, which is the first one is natural disaster. For example, a flood or fire that damage company assets. This affect assets values, repair costs, and insurance claims. Next one is business acquisition or disposal. Buying or selling a subsidiary can significantly change the company's financial position and profit.
Hello and good day. My name is DARREN TECK. As for my part, I'll be talking about the interim reporting period for both current and comparative interim financial statement. The company that I chose from Bursa Malaysia is Maybank Berhad. As we all know, interim reporting is a financial update provided by a company before its full year annual report. Under MFRS 134, the company must provide these updates quarterly. The entire purpose of this is comparability. Investors need to know two things. First is how the company is doing right now, and second, how does that compare to the same time last year. That's why every interim report has two sets of data, the current period and the comparative period. Now, let's look at Maybank's Berhad interim report for the statement of financial position. We can see that the current period is at the end of 30th June 2025, whereas the comparative period is at the end of the immediate preceding financial year, 31st December 2024. Next, we have the statement of comprehensive income. This statement is unique because it requires two sets of comparison. First, it shows the income for the current interim period itself. The 3 months of second quarter, which is from 1st April to 30th June 2025. Then it is compared to the same 3 months period from the prior year, which was on 30th June 2024. Secondly, it shows the cumulative year-to-date report. Since this is a second quarter report, that's the full 6 months from 1st January to 30th June 2025. It is then compared to the same 6-month period from the previous year, which was on 30th June 2024. Finally, we have the statement of changes in equity and the statement of cash flows. These two statements are presented cumulatively on a year-to-date basis only. So just like the second part of the income statement, Maybank report shows the data for the 6 months ended 30th June 2025. And for the comparative column, the data shows the 6 months ended 30th June 2024. In conclusion, the tabular format clearly lays out the current and comparative period for each statement based on Maybank's second quarter 2025 report. This dual comparison is what gives investors a clear and timely understanding of the company's performance. Thank you. That's all from me.